ones on your screen also, but I want to focus on what Jefferies is saying about the Adani Group stock. 6 of 7 listed companies have ended in the green in an otherwise muted market. Jefferies has now come up with a note on the conglomerate. They believe earnings are going to grow at a compounded annual growth of 22% through FY27. My colleague Swami Sarkar is joining with more details.
Yes, Jefferies has come out with this positive note on the entire Adani Group of companies. They are saying that FY25 was a year of consolidation for the Adani Group, where the EBITDA growth that we had seen compared to last year was around 14% as against the 5-year CAGR of 25%. But they are also saying that the 7 listed Adani Group companies have posted an EBITDA of close to 74,000 crore rupees, and 82% of this total EBITDA has come in from the core infra portfolio. Now, if you look at the 7 listed Adani Group companies, only Ambuja has reported a decline in its EBITDA of around 22%, but that is largely because of weak pricing that we had seen in the industry and because of the M&A related integration cost. Adani Enterprise on that front has reported a 25% growth in its EBITDA, which was largely led by the new businesses and the incubating businesses, that is the airport and the Adani New Industries Limited. Adani Green posted an EBITDA growth of 22% on a YOY basis, largely driven on the back of capacity addition and improved utilization that we had seen in FY25. For Adani Ports, we had seen, for Adani Energy, we had seen a growth of around 22%, and this was largely driven by capacity addition. For Adani Ports, the EBITDA growth stood at around 16% on a YOY basis on the back of higher realization in the port business, in the logistic business, and also because of margin expansion that we had seen in FY25. For Adani Power, the growth was around 12% on the back of higher merchant sales and acquisitions that the company had done. For Adani Total Gas, again, the growth was low at around 3%, but this was because of higher gas costs. But if you look at the volume growth for Adani Total in FY25, it stood at around 15%, which is the highest that we have seen in the industry. Now, if you look at the leverage, now yes, the leverage of the group has increased, but that is largely again because of the accelerated capital expenditure that the group has been doing towards the future growth plans of the company. Now, if you look at the net debt of the group, that has increased to around 2.7 lakh crore rupees as against 2.2 lakh crore previous year. The leverage ratio, that is net debt to EBITDA, has increased to 3.7 times from 3.3 times, but again, it is much lower compared to what it was a couple of years back, which stood at around 5 times. And again, this capital expenditure has been done towards the future growth of the company, and most of this has happened in companies like Adani Enterprises and Adani Green, and this was already all capital expenditure led debt increase that we have seen in the group. Now, what is the way ahead for the Adani Group? Now, for the entire group, Jefferies is expecting the EBITDA to grow at a CAGR of around 22% over FY25 to FY27. For Adani Enterprises specifically, new projects like the Navi Mumbai Airport, Ganga Expressway, and this copper smelter commissioning will aid the EBITDA growth. For Ambuja, it will be the organic capacity addition that one needs to watch out for. They're aiming at around 19 MTPA of capacity addition. For Adani Ports, they're expecting the marine business to grow nearly 3 times. The EBITDA of the marine business will grow nearly 3 times over FY25 to FY27. For Adani Green, they are focusing on 50 megawatt of capacity target that they have by 2030. So that is one thing that we need to watch out for. For Adani Energy, it is the growth in the smart meter which will lead the growth. In fact, the smart meter segment could grow at 30% plus EBITDA CAGR over FY25 to FY27. And lastly, when it comes to Adani Power, they have a guidance of raising the capacity by around 1.7 times to around 30.7 gigawatt by 2030. And this guidance of the company remains intact. So that is the key thing to watch out for when it comes to Adani Power.